Boom. What is up, everybody? Hey, I just saw some of you over on Pre-Market Prep. Welcome to Benzinga All Access. This is the weekly show where we take a second and actually get to know some of the companies that we oftentimes will just reduce to tickers or charts on a screen, right? Every company has a story. This is the show that gets you to that story. So I'm Spencer Israel. We've got 4 interviews today with emerging companies in the industries of education, in recruiting, in biotech. And we're going to spend some time and talk to these executives and talk to these founders and CEOs about their mission, about the story of their company. And hey, the ask of them is to sell us on your company. Now, as I say every time we do this show, full disclosure, Benzinga All Access is a sponsored show. All of the companies that are appearing on this show today have paid Benzinga to be here. That being said, there is a however. They do not know what I'm going to ask them. We have not talked to, I don't even write my questions down, to be honest. I genuinely don't. I have notes, but I don't write questions down. They all come from here, and they come from the conversation, and they come from you in the chat. Yes, you in the chat. If you have a question for a company on today's show, please don't be shy. Ask away in the chat. We will save some time at the end of every one of these interviews for questions from the chat. So we've got 20 minutes with the CEO of Recruiter.com, Evan Sohn. We've got Nutriband and their CEO, Gareth Sheridan. We have a pre-recorded interview with Zhenyu and Craig Wilson from Elite Education Group. And we have the co-founder and CEO of Cingulate, Shane Schaffer, on the show today. I think we're ready. Go ahead, producer. Let's roll that intro. Lisa King. We are working to get them on the show. What up, Paint? What up, John Doe? What up, Eric? Yeah, John Doe, you can ask questions. Okay, so let's move along here. We're gonna start the show off today by doing something a little bit different. We are gonna bring Money Mitch on this show because it's 9:20. The open is in 10 minutes, and we thought, let's try something different. Rather than start the show off with an interview, let's actually start the show off by talking about the market. And then we're going to get to the interviews. So we're going to have some market talk. We're going to do some live trades if we can. And then we'll get to the interviews at a little bit after the open. First, though, some other housekeeping items to address. Number 1, this show is sponsored by a company called Ticker. That's Ticker with 2 I's, Tiicker. It is a company that is connecting everyday investors with the brands that they love. If you are a shareholder in a company, you can get rewards just for owning stock in that company. That's right. It really is that simple. Don't hear it from me. Hear it from Ticker. Let's go ahead and roll that video.
What is Ticker? That's right. Ticker with 2 I's, just like you. Because it's for you, for investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering today.
All right. And we're back. Sorry. So I've got Mitch here. I'm going to bring Mitch on in a second. TIICKER/Benzinga. That's the link to click. It's on the screen. It's in the description. Okay. Go to that link, create an account, connect your brokerage account to it. Confirm it when they send you your confirmation email. Confirm your email. And on that confirmation page, there will be a button, a little box. It says, hey, are you from Benzinga? You say, yes, I'm from Benzinga. and they'll say, okay, we're going to send you a $20 Amazon gift card for free. Do that, get the gift card, and get perks for owning stocks in the companies that you like. It goes back to that Peter Lynch saying, invest in what you know. Invest in what you use and the products that you use. Ticker.com, TIICKER/Benzinga. Check it out. Okay. Before I bring Mitch on, I'm about to bring Mitch on, but I need you all to do me one quick favor. You know what it is. It's the like button. It's the like button. Hit the like button for me. I'd appreciate that. It makes me feel good about myself, and Lord knows I need that always. All right. That being said, enough of me. Let's bring on Money Mitch here. We'll walk you into the open, and we'll go from there. Money Mitch, man, how are we doing? What's up? What's up?
What's going on, team? How we doing out there? Let's go ahead. Let's get to it. I need a little entrance music,
Entrance music. Whoa.
Let's go. Let's get my screen on up here.
I've got the pro.
You got the pro? Let's go. Let's go ahead. Let's look at ready right here at the open. One thing that we're going to be looking for out the gates is some shorts. I'm still short on Roblox. I still have the long on CCL. The stop is set on CCL at 1980s. We'll see if we get down there and get stopped out here at the gates. Roblox is still short from 62.40s. So that's looking good for us out the gates here. I'm going to try to take a quick short right here out the gates. Of course, there's going to be a little bit more momentum, and we'll try to close it within the 10 minutes that we're going to be live right here trading. I'll let Spencer look out and see what we see on the movers right out the gates. And always, if you guys got some stocks, throw them up.
If you have no idea what this is Benzinga Pro. This is our real-time news and research platform that you have to pay for because it's freaking awesome. And I'm looking at this movers tool. I've got my gainers on top, my losers on the bottom. And what do you see here? Snapchat. And I do have some filters on, full disclosure. This is not every stock ever. I do filter out low-price stocks because I do. So Snapchat is your top gainer this morning, Bill.com. But again, you kind of have to look at these on an individual basis. Let's go to some charts here, and you can look at Snap. I don't know why I have Novavax up here. Let's get Snap up here, and we can just see. Look at Snapchat this morning. That's good. Look at Snapchat this morning, right? So yes, it is up 46% in the overnight session. However, you always want to know where is your pre-market high or low. In this case, our pre-market high is all the way up, just below $40. So there are going to be headlines, oh, Snapchat rallies overnight. Yeah, it rallied. But to me, the fact that it's off its pre-market high is more important for now. So that's my bogey, $40 on Snapchat, right? That's what we're watching here. I'm like, all this comes out to a bullish morning, but bullish morning with like a question mark, right? Because again, we're $5 off that high. How is the crazy jobs number going to impact things today? Well, we'll find out in a few minutes here. But so watching Snapchat, watching Bill.com, that was the other big gainer of the day, up 20%. Kind of the same story, right? Pre-market high, very simple, 228, nice and even. We're at 205 now. So again, bullish overnight session with a bit of a question mark. So watching all these overnight gappers on the upside and on the downside. Vanda Pharmaceuticals, they must have had some news out. VNDA. They have any? Let's check in the news feed here. It was halted this morning. They had a phase 3 study that did not meet its primary endpoint. Well, whenever that happens, you're in for some trouble. So VNDA is down 22% this morning. I don't know this company. I don't know what's in the pipeline, but that ain't good. So. Do we have any levels? You just lost 3 months worth of gains there in one overnight session. So biotech is tough for that reason. What else you got here? Sinclair Broadcast Group, they had earnings. SBGI, Clorox, we talked about that on pre-market prep this morning. They had a weak report. Ford's report wasn't that terrible, but it was a very, very high bar to clear for them. How's Ford doing this morning? Let's pull up that F chart. 15-minute chart. Again, it is down, but look at that. And I'm no technician. Then we just lost Mitch. I'm no technician, but y'all see what I'm seeing over there? Shoulder, head, shoulder. Mitch, you back?
Yeah, I'm back.
All right, cool.
Had a little refresh.
All right. I was saying I'm no technician, but you see what I see here? Shoulder, head. Yeah.
There's a reason why, there's a big support that we broke in the pre-market, which is at the 1886 level. You could round it up to 19 if you want to round it up, but I think that's the level you need to see it get back above if you're ever going to trade towards the bullish side here. If not, then you're just looking to try to catch the dip underneath the support. And that's just not where I like to look for it. I at least let it get back above that support. Then we can look for the move back towards the upside. I think Ford is just going to struggle here in the first quarter. I do think that you'll get another EV wave sometime in 2022, but I don't think right now is that time.
All right, it's 9:29, just about, almost 9. So we got less than a minute or so until the open. When we get to 9:30, I will be switching over to my screener or my scanner tool. But for now, let's just stick with the movers for now, and we'll watch things. What are you watching? You want to share your screen again and pull up some charts?
Well, if you just want to pull up the SPY. Let's take a look at the SPY, right? Because it's going to be so important. We got that jobs number. We got a big down candle, and we're almost recovering that whole candle. I want to see if that candle gets recovered. That was the candle on the 830. 830. I could take a look at the 1 minute, see if it was a little bit bigger. I'm looking at the 5 minute.
This guy.
Yeah, but that's that candle exactly. That candle, you need to see it recover, because that's when we got the downfall with the numbers. So if that can get recovered today, I would look for maybe potentially momentum quickly going towards the upside, because a lot of people are looking short right now. Let's just be honest. With these numbers, what happened in these bigger FANG stocks, some people are looking for shorts, and that can cause really quick spikes on ups, and then you see the retracement in the afternoon. The same thing we got yesterday, right? We stayed in chop until around 11, and then we started dropping. So just be careful that you don't see those drops right out the gates and that they come later in the day. Here's the bell. Time to get working. Let's do this.
9:30. There we go. Can you share your screen as well? I want to see what you're watching as well.
Yeah, let's do it.
There's our opening bell, which means I got to get on over off of the screener, off of the movers tool onto a scanner. I've got gainers on the left. I've got losers on the right, and I'm watching changes from the open. Let's change that.
Let's go. Let's go.
No dice. All right. Watching changes from the open. What do we got here? We got 10 minutes before our first guess. That's what we got. It is, by the way, I should mention, speaking of jobs number, it's a great day to talk to who we're going to talk to in 10 minutes. Sohn is the CEO of recruiter.com. He can talk all about that. So I was confused as all heck about that jobs number. He can help us make sense of it. But that'll be
long on XOM here, 81 here. Risk is 80, 85 here on the downside. Let's see if we can get a little pop here on XOM.
Drop your tickers in the chat. What are you guys watching? I'm seeing our old friend Nightscope, KSCP, having a nice candle off the open there. I haven't looked at that one in a couple of days. What else we got? Let's just start ripping through some charts here. So I got the SPY up. Yeah, we did see a little bit of a pop there off the open. This is on the 1 minute chart here. So Q is trading higher off the open. SPY popped off the open. We got to watch Amazon like a hawk today. Oh, yeah. Oh, whoa, boy.
Not what you wanted to see there, right?
Not what you want to see.
And look at that down action there.
Snapchat doing the same thing to some extent. Yeah, Pinterest the same thing. To some extent, but nothing quite as bad as that Amazon. Amazon's report was good. I don't think it was like this good, and their guidance was a little bit light. Again, guidance always more important than earnings, because guidance looks forward, earnings look backwards.
All right, guys, here's that spike. We're gonna go look to sell into above the 25s here. That we got in there at 81s. We're gonna look to just make a quick little scalp here, trade above the 81.25s.
Wow, this Amazon chart is actually looking a little bit dicey right now. Holy cow, another flush downward. Do I hear 3,000?
What's going on with Apple?
I'm going the same way as Amazon, I would suspect.
Yeah, well, I mean, a little bit.
To some extent. Amazon's going to be your leader here today. A leader up or a leader down, one way or the other, is going to be your leader. But do I hear 3K in Amazon? At the rate we're going, and it'll be that way in a few minutes.
All right, SPY right here, fighting above, trying to fight above the 446.50s. If you don't see it get back above there, it could just start flushing down. Be careful out there, guys.
Yeah, wow. This is pretty remarkable stuff.
All right, guys, let's go ahead. Let's put out this order here.
Look at this Amazon right now. Sorry to interrupt you.
All right, order out there towards 81.25. Let's see if we can get a little pop here. Boom, got it. Boom, baby. Trade right out the gates. XOM here. Oil was looking for an upside action here. We called out the level of 80.86 at the pre-market. That pushed up there towards 81. I got it on the pullback back down towards 81, and that's called not a pullback. That's actually called a technical term called a throwback. When you get above the breakout point and you come back to that breakout point, then you look for the extension back above the highs. That's not a bad trade there. XOM.
What
We'll
the heck just happened in Snapchat? Did you all see that? Look at that Snapchat chart. What the heck was
I had
that?
a feeling that it was going to be a little choppy there. Now you got 3 highs in the 37. I actually would look for shorts here. Let's see if I can get it.
Wow. I want to know what you are watching. I saw someone mention Snap in the chat. Yeah, Asana. I saw the spike as well on Asana. Let's go to that chart real fast. Yeah, same story, right? Right off the open. Thad, yeah. You know what I've learned listening to Dennis over the years? Dennis, he's a trader. He gets high, he gets low. He gets high. His mood is very volatile. My mood is much more even keeled than Dennis, and Joel and I are in that boat together. Dennis's mood is high or it's low. He's volatile, just like the market on any given day.
Isn't that how we all are? Yeah. 1 second you're bullish, then
a few moments later.
You're bearish.
That's it. That's it.
Isn't that how it goes? I mean, let's just be honest. That's how it is out there, guys. And sometimes it could be. It's a trap.
It could be a trap.
So you got to be careful out there. One thing to always understand, guys, is what I call ultimate risk. I talk about this sometimes. What ultimate risk means is that when you take a trade, right, we usually establish a risk, right? Spencer, we're like, let's say we're risking $50 to make 100. Yep. Right. One thing that I like to establish is called an ultimate risk. This is what I do only really in day trading, because sometimes what you get is slippage, right? Like, let's say it just blows through your stop point and it just really quickly, like, let's say Snap, you bought at 36. Your risk was 35, but that thing went down all the way towards like the low there on the 5 minute is 34.15. So in 5 minutes, it just blew past your spot. You got to have another spot below your risk that no matter what, if you see that number pop up, I'm out. I'm hitting that red button and I'm out.
All right, it's 9:36. We're going to hang out, Mitch and I, for a couple of more minutes, and then we will get to the actual meat of the show, the conversations. Again, we are taking you behind the chart, behind the ticker. Every company has a story, and these guys are focused on long term. We're focused on short term right now. They're focused on long term, and they're going to tell us what's going on in their business, in their industry, and why should we care about their company. So coming up at 9:40, Evan Sohn, CEO of Recruiter.com, will be joining us to answer those questions and also help us make sense of this jobs number and help us put it into context, because his business is directly impacted by things like the jobs number, or I should say he may have insights into that before the number comes out. So we got Evan Sohn in a few minutes. I'm very excited for that conversation. Someone in the chat has been spamming Commerce Bank all morning.
Boom, baby. Look at that XOM. Roblox working too there. It stopped out of that CCL, but XOM really pushing off there now towards 81.50s there. So you guys can probably be looking at some oil trades today. Gosh, you can take a look at. You could also take a look at CVX, Chevron Group. I'm going to be looking for those to continue its way on up. And there you guys have it. Oil making a decent move on up. SPY looks like it wants to crack down through the 445. Look for continuation on the downside there. Snap looked really good at 35 for a short there. I wasn't able to get it because it was really quickly, but that's not a bad one to take a look at. We'll see if it gets back towards, let's say, 35.25s also.
Please don't try to catch falling knives. I'm looking at Meta right now. Okay, it always takes more than one day to shake out. So, woo. See, it made me sneeze. It made me sneeze looking at this chart. So we're making new lows of the move here. 232 now in Meta. Please don't catch falling knives. You will cut your hand off, or at least a finger or two.
At least. One thing that I think is important is always just understand the market environment you're in. In certain market environments, it's okay to catch falling knives, right? Like, I mean, if you're seeing nothing but buy the dips working and everybody seeing that, hey, stocks come down, it comes right back on up. But now you're seeing what? Stocks come down, they come up, and they come right back down. So you got to be careful there and always know your risk as a trader. And if you're going to take trades off of, let's say, falling knives, just try to be a little bit closer towards the share on the risk side. This isn't the time to just load up the boat, I would say. I think you got to go ahead and limit your share size, especially if you're seeing a lot of damage to your accounts. Times like this is when we need to go ahead and do what? Focus on one thing only. That's risk management. Manage that risk every trade and manage your risk overall for the year. If you're noticing, hey, I got literally one winning trade in my last 10 trades, maybe it's time to hit that break a little bit and just worry more about the risk management, lower down the share size, control that risk until you see the trade and your data pointing towards the upside.
That's it. All right, Mitch, it has been a pleasure as always, but I have to let you go because it is time for our first conversation of the day. So, Mitch, good luck out there. Go make some money. Everyone, smash that like for Mitch, and we'll catch you later, man.
All right. I got to say, Spencer. Enjoy your
And I was gone. All right. Let's bring on our first guest of the day, Evan Sohn. As I mentioned, he's the CEO of Recruiter.com, ticker RCRT. Producer, let's get Evan on the show right now. There he is. Evan.
Hey, good morning. And I actually saw that movie. That was from Karate Kid. I actually saw that in the movie theater. So let's set this up properly. So that was the best around.
Okay, yeah, I'm not old enough to have seen it in the theaters, but I have seen it several times. Evan, it is a great day to have you on here to help us make sense of the labor market right now. We had a jobs number this morning that came in way higher than expected. They also revised last month's number way higher. So let's just start high level here. Can you give us a sense of like what you're seeing in the job market right now?
So you're seeing quitting at rates that we've never seen before, right?
Yeah.
So let's keep this all in context, right? So the number that you saw this morning at 8:30 was the new jobs number. The quit number, there were 4.3 million people that quit in December.
Yeah.
Very, very high number. That's up. The average in 2019 was 3.5 million. So it is a significant number. So there are still millions of people getting hired every single month. And the delta between the two, that's what actually creates the new jobs number. So they were new jobs as opposed to backfill jobs. And it's just exciting to see new jobs coming in from restaurants. And there's some timing involved in that, et cetera. But look, we started to see companies stock up on recruiters towards the end of 21 and really in January. I said they were stocking up like on Purell before the pandemic. Tremendous demand for recruiters as a leading indicator for just how much talent they need to hire in their own companies.
So let's talk about that. Let's talk about what your business is.
So our business really is helping companies of all sizes, from startups to Fortune 50, recruit talent faster and better. We have an on-demand platform of over 30,000 recruiters. So think of us as like Uber for recruiting. And then we empower those recruiters with an incredible tech stack. We have artificial intelligence software, real artificial intelligence software with access to over 170 million profiles in the US alone. So we have just about every working adult in the U.S. indexed and profiled, and we engage those candidates on behalf of our clients to build candidate pipelines and pipelines of talent for our clients.
And just to put this, I saw this stat the other day, or maybe it was yesterday. I think it was yesterday. I saw like Amazon, if you average it out, they hire like 1,000 people a day or something insane like that. Like and that's just one company. Like there is an insane appetite right now for recruiting and recruiters who do the recruiting, right?
Yeah. So I'll make a statement.
Yeah.
Most companies, there are many companies that have an insatiable appetite for talent. Right. And why is it insatiable? Because right now, these companies are growing, right? Amazon's growing. There are companies that are growing. The challenge of the economy is not like it was years ago, where the sort of the dot-com bust, where companies didn't really have revenues. These companies all have revenues. They all need the talent. Yet the talent, not just the Great Resignation, but what we call the job hopper economy, the talent is moving around. There's far, far more turnover than ever before. It's not going back to where it was in the 2019 numbers. You're always going to have larger numbers of people actually churning. And what we're talking about now is just the amount of money that's going to be spent on talent acquisition in 2022 is just going to be an absurd amount of money, as companies need to both fill the roles that are open, that are still open from 21, meet their growth plans of 22, and then deal and address with all the sheer number of people that are leaving companies really on a regular basis.
I like this chart that you were kind enough to share with us. It sort of gets at what it really is, what's happened the last 2 years, and it sort of gets at everything you just said.
Yeah, no, absolutely. So what you're seeing here now on the screen, and thanks for using that. Really, these trends, and the first two trends are really episodic, right? So you have this reopening of the economy, getting all the working collar people back to work, get the restaurants open, the hotels, the leisure, hospitality. And I think 160,000 of the jobs that they talked about this morning, the jobs number, were in the hospitality restaurants that are opening up. So that's all going to happen. We're going to get those people back to work. We're working hard to do that. Our clients are, some very, very large companies in manufacturing, in all those areas. The second trend is really this Great Resignation. So we saw 4.5 million people quit in November, 4.3 people quit in December, but there's always a number of people that quit. This is just a much higher number. We saw 27% more people quit in this December than a year ago. So it's a lot of people quitting because they're either they don't want to go back full time, they want to change, they have childcare issues, they move to Florida, the company's in New York. That too will subside probably by around the summertime. But what's not changing, what's really going to be systemic, is really this job hopper economy. You have 60% of all millennials that have no problem leaving a job within the first 6 months. You out in Silicon Valley, sort of pre-pandemic, and you saw someone's resume that was been around for 12 years in 4 companies, and you're like, wow, that's a hot software engineer, not a job hopper. And I think you're going to start seeing more and more people leave on a regular basis. And certainly, we've made it easy, right? I could work from anywhere. I could interview through video, Skype, or Zoom, and companies have this insatiable appetite for talent. So I made a statement last October, everyone in this country is now more valuable than they were 2 years ago. Everybody, you, me, the dishwasher in a restaurant, the person willing to walk into a factory, and the chief product officer.
Yeah. And that gets at this next slide that you shared with us, which is the appetite, right? The desire, the need, the spending for talent this is probably not, in your eyes, a short-term bump. It's not a short-term bump.
Yeah, and this chart's in thousands. So you could think about, the Society of Human Resource Management, SHRM, the cost now to hire an employee in the U.S. is $4,425. Just going to give some math. I know we're not doing math on Fridays, but there's a little bit of math, right? And that's non-executive, right? So let's just say the standard employee, $4,420 to hire them. And if we're hiring more people now than ever before, because more people are quitting than ever before, that number can actually hit about $50 billion in 22. So if the standard turnover in the U.S. is around 22%, so if you took the 160 million working adults in the U.S., probably 22% were turning over a year. People expect that number to be over 30% for this year and even higher. And if it hits 30%, that number is about $50 billion in 22. And that's And we actually expect that 4,400 to go up for 22. So there's going to be a lot of new money. This is all incremental spend on top of 2019.
So let's talk about how you fit into all this entire. If we're saying that this is a secular long-term trend driven by a variety of macro factors, which is what you're saying. How does recruiter.com fit into that?
So we're all about proactive.
Right.
We are going to go, we're all about helping companies of all sizes find talent. Hanging a shingle up saying help wanted is not getting people into the door. You need a proactive tool and you need proactive people to do that. So for many companies, the more sophisticated companies, they're like, gee, we need recruiters, and we provide those recruiters like Uber, right? I need a recruiter to take me from point A to point B on a contract basis. And we have those recruiters that we assign to companies, from one or a fractional in-house recruiter to 30 at one company. These recruiters are all paid by the hour or by the project, not paid like a headhunter, like with a success fee. We think that business is being reinvented today as we speak. The other is our software side. So companies will say, hey, I need candidates. I need a constant flow of candidates. And we use our tools to actually go engage these candidates, our AI software, and then we combine the two together. So we have these incredible tools that search out our 170 million profiles and get candidates to say, yes, I'm interested in that opportunity. And then we have the on-demand recruiters that work with those candidates on behalf of our clients, to get the butts in the seats.
Can you go back to that comment about the headhunter business model? I mean,
Sure.
if anyone's ever had experience, and I mean no disrespect, but it's a bit of a antiquated model.
Yeah,
So,
absolutely antiquated model. And it goes back to a time where when I place someone, they're going to stay there for 25 years or 20 years, and I'm going to get 30% of their salary. And that made a lot of sense. And it probably makes sense if they're going to stay there for 10 years. But if a person's staying at a company for 24 months, paying someone 30% or 20% of that salary just doesn't really make a lot of sense. And companies are waking up to that. We actually believe that every company from probably 25 employees and up will need to have someone focused on talent acquisition and retention, certainly for 22. And we're working on products now that will really drive that, combining our software and our on-demand recruiters. And I'll give you an analogy. Everybody takes security seriously today. 30 years ago, we didn't, and now everyone does. Whether we're outsourcing it, whether you have a chief security officer, or whether we have a service providing us hosted firewall and VPN services, we all take that seriously. And I believe that we're going to be doing the same thing with talent acquisition, really now in 22.
So how exactly does your business model differ from that business model? Because you're still getting a cut, right?
No, so we do not do
Okay.
anything
Okay.
on, the only thing we do on success is when our clients hire the recruiters that we've placed there on contract, we get a fee for that. But otherwise,
Okay.
the recruiters actually have the last name of their company. So if our client is Dentsu, which is a very large advertising firm, our recruiters act as if they work at Dentsu. These are, it's like you get an Uber driver, they're your driver taking you to your destination. Our recruiters are acting the same way. Think of it as like Upwork or Fiverr, but focused on talent acquisition. They are not getting 30% of a salary. They're getting paid to do their actual work itself. So we're actually saving companies, thousands and thousands and thousands of dollars. Dentsu is a great example. Big company. We did about 120 hires for them in 90 days. We scaled up to about
Wow.
16 on-demand recruiters. They used our software. Media Bistro is our career board specific to the media industry. What they would have had to pay if that was on a 30% of a salary would have been gastronomical. And instead it was, an incredibly strong ROI for them.
So you're going for the software as a service subscription model.
Yeah, we are we are very, very, very software oriented. Our software subscriptions have been growing month over month, really at an incredible rate. Our software is fantastic. Got a great tech team. And it's exciting because we're able to use our tools, not just for large companies like Dentsu, but for, startup companies. They're trying to hire folks. So our client is either the CEO of the company. I just raised money. I'm looking for people, or the large companies. I got to hire 200 people in the next 160 days, et cetera.
Here's a good question from our chat from Voodoo. Wouldn't it be cheaper for those companies to retain an in-house talent acquisition team?
Yeah, that's what we do, right? We become their in-house talent acquisition team. That's exactly what we provide. So we're augmenting their teams by giving them contract recruiters, and they could scale up and scale down or hire them full time. And I think clients really like that. Clients really like the fact that they could add 5 recruiters now for the next 6 months or the next 30 days or the next 120 days, scale up and scale down as they needed. You know, the example I would give to that caller is if you were doing a real estate transaction, let's assume you're a company and you're doing a real estate transaction over in Seattle, Washington. You're not going to hire a full-time attorney to handle that project for you. You're going to find an attorney, you're going to pay them to do that assignment. And when it's over, you're going to get rid of that attorney or scale them backwards. And that's what we're providing for companies of all sizes. And by the way, you know, we're providing fractional in-house talent acquisition managers for small companies too. So every company now gets the benefit of having these contract recruiters, these on-demand recruiters from large to small.
Can you just compare your business today from your business 2 years ago? 2 years ago was before COVID still. So like how has your business changed in terms of your customers and
So, you know, when Recruiter.com really was a media company. It actually still is, right? We have 3.5 million social media touch points, 4 of the 10 largest LinkedIn groups, you know, 48,000 Twitter followers. We produce articles, content, et cetera. And we really went on this mission about 2.5 years ago to really transform the company into a software and transactional machine. And that's really what we've been doing. Obviously, you know, COVID came and it gave us an opportunity to really scale the actual business at a very high level. As the first thing companies were getting rid of at the beginning of COVID were really their recruiters. So as companies started to shed their full-time talent acquisition team, going back to your caller, we became that immediate go-to. You know, they still had to hire, or they still had to address those issues. And we were just doing those at a smaller scale. And then we really used 21 to really get phenomenal product market fit. We announced not too long ago, preliminary numbers for Q4, growing 40% between Q3 and Q4, 100% of that organic, really in all the right directions. So it's really been an incredible, you know, to make a long story shorter or short story longer, you know, I actually sat down with the board pre-COVID, at the beginning of COVID. And I said to the board, I was chairman of the board then, look, when this whole pandemic is over, the job market is going to be in absolute disarray. And we as Recruiter.com are going to be there as that stock for post-pandemic. We're going to be there to help the company, help the country, you know, get back to work. And I became CEO in June of 21 with that in mind.
So now we're deep enough into this now where a lot of the initial like trends that we saw happen this spring, summer, fall 2020 have started to unwind a little bit, right? People have sort of returned to their normal lives, you know, quote unquote, reopening. Companies like Zoom or Peloton have come back down to earth. And we've got, you know, travel companies have seen continuous upticks. How has that been for you? Because you're basically saying like, yes, we are a company, we are a business that like got a rocket ship booster from this pandemic, but we're seeing other companies that got that same booster are getting a little bit less boost these days.
Yeah. So I would say that, like we just walked through that slide, you know, you're saying the job economy is opening. People are getting back to work finally. Excellent. And that'll keep us busy this year. The Great Resignation will slow up. True. But the job hopper economy is not going away. If I'm working remote, and there are companies that are going to be always working remote, right? Yeah. It still is a candidate's market right now. We're still in this work from anywhere sort of model. And as long as companies are allowing their employees to work remote, the opportunity and the ability for that employee to leave, and go to another company because their office doesn't change, right? This is my office. I'm sitting in my office. I might be sitting in my office working for another company, but it's just so easy to do that. It's so easy to apply for jobs. It's easier to interview for jobs. And if we're working remote, keeping the employees, the retention side of the industry is going to actually be expensive. And you look at Goldman Sachs's report the other day, a huge expense for them was in hiring and retention, huge. And you're just going to see those numbers really morph. And again, I think what this really says is that every company is going to have to think about their talent profile. What's my headcount for the year? What's my turnover going to be? How do I replace that? And I'm going to need someone to help me do that. And we're going to be there to do that for those companies. And again, you know, we're really in the $80,000 salary and above, right? You know, so we're not ZipRecruiter, we're not Indeed. We're really at a higher salary range, if you want, if you will, for those things. Even though we don't get paid on as a headhunter, you really look at, the roles that we're working on. Although our clients include trucking companies, we're sourcing mechanics, truck drivers, nurses, healthcare, Java developers, financial analysts, really across the board.
Right. Okay, we got a couple more minutes here with Evan Sohn, the CEO of Recruiter.com, ticker RCRT. From a question from Brian in the chat: how much do you think constantly using contractors hurts business culture versus full-time direct hire people that you invest in?
Yeah, so it's an excellent question. It's all about the gig economy. The interesting thing is we said the same thing years ago when we started to outsource IT to during Y2K. We started outsourcing call centers in the 90s from the recession. We started outsourcing our data centers to AWS and Microsoft Azure in 2005. We've always done these sorts of things. We've always taken areas of the business that were less critical to ourselves and outsourced them. That was actually created by Jack Welch. That was his, one of the things that he created was, if you find a better place to get that component, go do it, right? Doesn't always have to be internal. I think talent acquisition is getting very, very specialized. It's no longer just go find me a Java developer. It's find me a Java developer that's willing to work with my company culture. Things are going to get more and more complicated. And it's not just a Java developer. It's a developer that knows these certain skills and these certain things. So I think recruiting, like legal, you wouldn't have your general counsel handle an SEC issue. You would get someone specific to that task. And I think that's really happening here now. And by the way, we've seen this huge growth in outsourced engineering, software engineering, on demand. A number of firms that have recently raised, real money providing those services. Why? Because I need that skill set. I need it for a definite period of time. And then when it's over, I could scale it up and scale it down.
Last one for you, Evan. This is also from the chat. Do you see a change in how employees work for employers in the near future? I think, for example, less full-time and more ad hoc positions. And are you preparing anything for that scenario?
Excellent question. Look, I do believe that we're shifting towards a more outcomes-based society from a business perspective, and less clock in, clock out, and certainly in the roles that are less time-based. So that I think that's really true, and I think companies should sort of embrace those sorts of things. What do I have to accomplish, and did I accomplish that, regardless of how many hours I'm actually putting into those roles. I do think that the work-life balance is a very high priority today for candidates. So it's not just about throwing money at a problem, but creating a balance. We ourselves are talk regularly as a management team with our company. We're about 70 people in the company now. Talk about how do we create an A+ virtual environment. And I think there are things that everyone could be doing to create a culture in a virtual world. We're actually giving a webinar at the end of February on reading body language over video. So I think, and creating culture, through video and doing interviews like that. So I think companies are now embracing the fact that the world is changing, and they're trying to align themselves with the talent that they have and the talent that they want.
I'm sitting up straight right now, so don't judge me. All right, Evan Sohn, CEO of Recruiter.com. Evan, it is always great to chat with you. Thank you so much for coming on Benzinga All Access today.
Thanks so much. Have a great day.
All righty. All right, let's keep this rolling. Hey, how many likes are we up to right now? Not enough is the answer. 109? Now 110? Oh, you can do better than that. Give me the 200, 300, 500. We can do it. My next guest is here right now. Gareth Sheridan is the CEO of a company called Nutriband, ticker NTRB on the NASDAQ. Let's get Gareth on the show. Gareth, how we doing, man? What's going on?
Hey, good, Spencer. How are you? Good morning.
Where are we talking to you from today?
Salt Lake City, Utah.
Salt Lake City. Okay, so it's early for you. So I appreciate you waking up extra early to be with us today, especially on a Friday. So, all right, Nutriband. Gareth, you're the CEO. Tell us about the company.
Yeah, Nutriband, we're a pharmaceutical company with a specific focus on transdermal technologies. Transdermal just basically means delivery through the skin. So we spotted a gap in the market, basically, that there wasn't a company solely focused on transdermal delivery, and the technology was starting to lag behind the rest of the pharmaceutical industry, in our opinion. So the company was originally founded in Ireland in 2012. And we spent a number of years, discussing the feasibility and how to build it out and how to grow the concept into a legitimate pharmaceutical company. In 2016, we then moved the company to the US and built out an acquisition strategy at that point. In 2018, we acquired what is now our clinical research subsidiary, 4P Therapeutics, and we acquired all of their IP and their pipeline, which we found very interesting and exactly what we were looking to build into. And then last year in 2021, we completed the acquisition of our now manufacturing subsidiary, Pocono Pharma, to build out our capabilities from clinical research and development to contract manufacturing to having our own pipeline in-house also.
Let's talk about that pipeline. Talk about companies that like you're rooting for. I'm rooting for you guys. Tell us about what's in the pipeline.
Our lead asset at the moment is a technology we built and patented called Aversa. So we recently just got our US patent on this. Aversa is a technology that basically deters abuse and misuse of potentially harmful or abusable drugs, like opiates, for example. We're specifically targeting fentanyl patches, which when used correctly are very effective medications for pain. But there's an unfortunate circumstance that there's no protection around these patches, and there's a lot of residual fentanyl left in these patches after use. And in the wrong hands, fentanyl can be 50 times more potent than heroin, and there's obviously a black market aftermarket use for this. So our goal is to come in with our Aversa technology to make opiate patches safe, starting with fentanyl, and then use this platform technology to build our way down the family of opiates such as methylphenidate, buprenorphine, and make the entire family safe again.
All right, I'm going to clumsily, I think, bring this on the screen right now. I'm just going to shoot it over our face right now. So this is basically what you were just saying, right?
Correct.
Yeah. Okay. So this is the Aversa, the routes of abuse and how Aversa could stop it.
Basically, this gives you an indication of how these patches are currently abused. So if you can imagine just a basic patch, almost compare it to a Band-Aid, for example. When people get these patches and try to extract the fentanyl for illicit use, they will chew the patch, they'll swallow it, they'll make a tea out of it. You can have people will smoke it. And there's also another thing that we like to focus on, which is accidental misuse. If you can imagine a small child picks a disposed fentanyl patch out of the garbage, they have it on their fingers now, they put their fingers in their mouth. It's resulted in a number of deaths, unfortunately, in children over the years. And this is something that we're trying to combat also.
So let's talk about, where you are in the pipeline here. Where are we in the pipeline?
Yeah, so we've made some significant progress on this in the last couple of months. Our first big milestone basically was we have signed a feasibility agreement with Kindeva Drug Delivery. Kindeva Drug Delivery is formerly 3M Drug Delivery. So we've partnered with essentially the pioneers of the modern day transdermal patch on this technology. That's given a lot of credibility to what we're working on. I think we probably couldn't have asked for a better partner to develop this further. And then following the announcement that we did partner with Kindeva, we were fortunate that the USPTO have issued our patent on this as well. So we now have this patented in 44 countries, including the United States, which makes up about half of the market opportunity.
But and as far as like the trials and where you're preclinical in the Aversa?
We're currently in the process now of building out the trial plan with Kindeva. The nice thing about what we're working on here is there's generic versions of this patch on the market now. We will be a branded product because of the technology we've added, but the trial itself is relatively straightforward. The main thing we need to do is conduct a human abuse liability study, which we've kind of informally put for the beginning of next year. This is a study basically where our patch is compared to an existing generic patch, and it's monitored which one is more easily abused or broken into, basically. So we're very confident in that we'll come out on the right side of that. With the results of that study, we can then claim abuse deterrence and market the product at a premium with a branded label.
So you said that Nutriband really, like you had an acquisition-based strategy. Why did you buy this IP? There's lots of stuff you could have bought. Why'd you buy this?
I think the opportunity with this IP is significant because it not only is there a huge market opportunity here. I mean, the fentanyl market overall has been declining over the years, but not due to the lack of need for this product. It's because of the liability issue and the concern around prescribing this product. So if this product is created in a safe manner, the physicians, payers, insurance companies, everybody will feel more comfortable prescribing this again. And then the people that really need this product have access to it again, which is key for us as well. The unfortunate thing that people tend to forget is not only the fact that we're making it virtually as abuse proof as possible we can, but on the other side of it, there's a lot of people that were really heavily reliant on this that no longer have access.
Yeah, and when you have to be living under a rock, frankly, to not understand why this is important. I mean, you can just see, like, look at this headline, right? I mean, the opioid problem in I guess I can't speak to the rest of the world, but at least in this country is bad.
Yeah, look, I mean, everybody's been so focused on COVID these last 2 years. In our opinion, there's another major pandemic going on at the moment that's been kind of overshadowed by this.
Yeah.
For the first time ever in a 12-month span, there's been 100,000 deaths related to overdose. 75% of this was opiate related.
Really?
Mm-hmm. So we're primed to come in at the right time to make a difference. We think fentanyl patches in their current state were probably only ever at 80% ready to go to market. There needed to be that security level, and we've come in. I think we're miles ahead of any competition in this space to come in and be a disruptor and make a difference with this.
So just to be clear, the Aversa platform, it deters against more than just fentanyl, right? There's other trials for other addictions, for other drugs, right?
Correct. Fentanyl is where we're starting. We're proving the model. We're proving the technology. We're going to work our way down the abusable kind of route then. So buprenorphine is next, methylphenidate. There's a list of opportunities for the platform technology. We're targeting fentanyl first because it has such a bad reputation. We want to come in and make sure that we can make a difference there. And the technology is very simple. It's basically, we haven't tried to overcomplicate the process. The main routes of abuse are oral, snorting, plugging, making tea, smoking. What we've simply done is added 2 food-grade ingredients to the back of an existing patch and made the release liner on the other side permeable. So the 2 ingredients we've added to the back is denatonium benzoate, which is the most bitter substance on the planet, combined with capsaicin. The nice thing is they're both food-grade.
Well, what does making the release patch? What is changing that do?
So if you can imagine a current patch in its existing form, you have basically 3 layers. You have a release liner, you have the drug layer, and then you have the backing liner. What we've done is just add an additional layer on the back of that again, containing these 2 ingredients. So if you try to chew the patch to extract the fentanyl, you have to chew through a combination of red pepper spray and denatonium benzoate. If you have to make a tea out of it, you then have to consume those 2 ingredients as well. If you have to, try and smoke it, you have to smoke those 2 ingredients as well. The nice thing is, again, that these are non-toxic, non-harmful ingredients. They're both food grade.
Right. Why make it food grade? I mean, pepper sprays. Well,
capsaicin, so red pepper extract. Yeah.
Red pepper extract. Pepper spray would be bad. So I guess the food-based thing would be so it's not lethal. I'm imagining.
Yeah, I mean, there's no harmful side effects. It's going to be extremely unpleasant, but it's not going to.
It's kind of stink. Yeah. All right.
I mean, denatonium benzoate is currently used in the likes of liquid detergents and household cleaners and so on. You might get a pineapple scented counter spray that you can spray on your counter, and your kitchen is going to smell great. But if you try then to taste that pineapple spray, it's not going to taste like that.
All right. And then why go the transdermal route? There are other avenues here.
Transdermal, we feel there's a big opportunity for somebody to come in and be the leader in the space. A lot of people tend to have transdermal as an add-on technology. We feel that we've been able to assemble a team of industry experts in this space that hadn't been done yet, and come in and really take advantage of the fact that transdermal technology has come leaps and bounds in the last 10 years compared to the previous 30. So we feel there's an opportunity to come in and create a bit of a storm there and be the number one in that space.
And then as far as upcoming catalysts, I mean, you're in the you're approaching the phase one phase of the Aversa trial for fentanyl abuse. But can you get, like, how specific can you get here? As far as timelines.
Timelines, we're targeting 24 to 30 months for this product. So it's relatively short time frame. It's relatively inexpensive compared to, let's say, a diabetes trial or something like that. And then we've recently completed a market analysis on what the Aversa fentanyl market opportunity is. And once we can get this product to market, there's an opportunity for this to be an $85 to $200 million revenue product per year. We have a decent lifespan left on the patent with a good head start on our competition. And we're currently at as of this morning, I think a $35 million market cap. So in our opinion, we're very much in the infancy of the opportunity here. If we were to generate that sort of revenue in as short as 24 to 30 months, I think the opportunity is grand.
But as far as like the upcoming catalyst, I mean, when can we expect to hear from you?
We're going to be consistently updating as the trial continues. I mean, we've officially started now with Condeva. We're working through the processes. There'll be regular updates on the trial and the milestones that we're achieving. So I would say to just monitor our press releases and 8K filings, but we're going to be very actively updating the shareholders.
And then since you mentioned the IP protection, I always ask, how important is the IP protection on for a company like yours?
Well, our IP is perfect for the situation we're in. Basically, we've a very broad protection on using aversive agents on the back of an existing patch. So if a competitor was to see this and see the opportunity that we see, which I'm sure we're being monitored, they would have to come and approach this at with a totally different mindset and a different approach to making it safe. I think we've taken a very simple approach. We haven't tried to overcomplicate the process. I'm not sure, without affecting the drug matrix or getting really overly creative, how a competitor could come in at this point and try and compete with us for the IP protection we have.
And then something else I always, have to ask when someone like you, whenever I talk to someone like you, is how are you on your cash right now, or future funding? Is it on the radar at all?
No, not right now. No, I mean, we've been very careful to only raise our initial funding round to list on NASDAQ. We've been very careful financially to get to this point and create as much value for our current shareholders as we can. I mean, if you look back at our financials in 2019, we did a couple $100,000 in revenue. In 2020, we did just under $1 million. 2021, we're looking to have significant growth on that again. We're putting a lot of effort and focus into our contract services, so our R&D services and our contract manufacturing services. Our goal really is to avoid any unnecessary dilutive financing and to be self-sufficient and fund the company internally.
A good question here from our chat from Voodoo. The fentanyl patch, for the patch use seems high risk. Why not focus on other established, drugs like morphine?
High risk is exactly why we're targeting fentanyl, because it's high risk from an overdose standpoint. You can find that fentanyl is extremely effective in that kind of overdose rate that we mentioned. So we would like to target what's a major concern initially, prove how strong our technology is, and then also the fentanyl market is a stronger financial opportunity for our shareholders.
Did we cover the entire pipeline? I don't think we did. There's more, right?
Yeah, well, so we've recently added methylphenidate and buprenorphine as follow-on products with our Aversa technology. So we'll start building out the model with fentanyl, and at some point in the near future, we'll start putting our plans together for the two follow-on products also. I think the partnership and feasibility study with Condeva has been a real show of confidence in the technology. Again, there's probably not another company in the world we would have picked ahead of Condeva to work on this. So the fact that they're working on it and excited about the technology is a real show of confidence.
Can you elaborate more on what that partnership entails?
So yes, Condeva have an FDA-approved fentanyl patch currently. So we will be taking their FDA-approved patch, adding our technology, and going through the necessary processes with the FDA to then take that patch to market using the Aversa technology.
Okay.
So it's cut out about 2 years of development work for us.
And for right now, you're obviously focused on, fentanyl and the Aversa product, but like this is the IP that you bought. But is it, if we fast forward way down the line here, are you still in that core M&A acquisition strategies? Is that still like the thing, or?
And we're very laser focused now on getting Aversa to market. I think we've been able to build out the capabilities that we wanted and needed. Our contract manufacturing subsidiary, they're cash positive month over month. We're building on their capabilities. We're building on their offerings. We've recently announced that we're going to be moving into topical lotions as an offering also. And then our 4P Therapeutics subsidiary, we're partnered with major multi-billion-dollar NASDAQ companies for certain trials and so on. So I mean, we've nothing else that we really need to add now. We need to stay laser focused on Aversa. Again, we have a 24 to 30 month timeline to get this to market and create some significant revenues, and then we can build the company further from there.
Yeah. Is there anything else that like upcoming that we didn't address, Gareth, that you feel like, or people that things people need to know just about the Nutriband story at all?
I think we've probably covered our mission and our goal here. I mean, I think the thing that really needs to resonate with people is how early in the process we are now at a $35 million market cap with a 2-year opportunity to create a couple $100 million in revenue per year with a product, with one single product, and that's not including the follow-on products with the same technology. So we just like to we like to reinforce that we're early stage. We think we're building up a fairly loyal shareholder base at this time that can see the end goal with this. So it's been a good couple months since we listed.
How, like, I'm just curious, like, how different, like, once you get the fentanyl abuse deterrent, like, once those trials get through, and let's just like make some assumptions here, and let's just assume that works. Like, how different is it to get the follow-on trials? It's the same technology, right? But you're testing for something different. So I'm like, how different is that? How much harder is that? Once you get the first one, is getting number 2 and number 3 exponentially easier, or are they all equally?
Yeah, we would imagine from an FDA standpoint that the technology that we've created with Aversa has essentially been validated then. So the process is kind of a tick the box process, go through the trials. We can almost expect that they would get the same approval as Aversa because it's the same technology. So really we proved the model once, and we proved the technology once, and then we expect kind of clear sailing from that point with the rest of the follow-on products.
Awesome. Gareth Sheridan is the CEO of Nutriband. The ticker is NTRB, and he woke up extra early to be here with us this morning, all the way. Well, I guess it's 10:20 my time, so it's 8:20 your time. So still early enough. So Gareth, I appreciate your time today. And as I said off the top, the kind of company that I really genuinely do wish you the best, and I'm rooting for you because you're genuinely trying to make the world a better place. And hey, not everyone can say that. So please keep us informed on the Aversa platform and the trials and how those are progressing, and we're rooting for you, and I hope it works out. Thanks for coming on All Access today.
Thanks, Spencer. See ya.
All right. So our next guest here, our next segment on today's show is going to be a little bit different. It is pre-recorded. We could not get these guys to come on. They were just unavailable like on Friday morning. So we decided to pre-record this next segment here. This is with Elite Education Group International. I talked to their CFO, Zhenyu, and the chair of their audit committee, Craig Wilson. So I'm going to play that interview for you in just a second. Before I play that interview, let's check on the likes. 138. Oh, let's get a few more of those guys. And then last thing I'm going to do before I play the conversation is check on the chat and check on the market. How we're looking out there, everyone. It's mixed. Oh, it's really mixed. Well, that's interesting. Really mixed. I'm just looking at my pro right now. How's our Amazon doing? I say our. I mostly mean just. All right. All right. This is okay, right? Amazon's okay. I don't know what that was off the open there, but this is okay. This is all right. I'm not panicking yet. One in the chat if you're panicking. This is no reason to panic right now. If Amazon was at 3,000, then yeah, that's panic situation. But I don't think we're there right now. I saw someone talking about Bitcoin. I'll do a crypto update at some point during the course of this show, just to look at that. But let me bring on this. Let me play this next segment right now. Again, I spoke with Zhenyu, the CFO of Elite Education Group International, and Craig Wilson, who is the chair of their audit. 40K, wow, chair of their audit committee. Bitcoin to $40,000. Why the dip works again? And we're talking about the business of higher education for U.S. students, but also for international students, right? Because that's a big part of their business. So, what the heck? Hold on. Where is my video? It is not where I left it. 1 second, everyone. I'm going to find this video right now. because it's not where I left it. Just 1 second. Let me get this video shared. We're going to throw some tunes on. And I want to get this video because for whatever reason, the video in StreamYard, Aaron, it's not where I left it. So give me 1 second here. Everyone, talk amongst yourselves while I get this video up. That's very strange. All right, here we go. Here we go. How's everyone doing? This is a great opportunity to take a moment and hit that like button. All right? Let's all hit that like button right now. 1, 2, 3. Smashed. Also, what do you guys think of the music? We got some very harsh feedback the first time we tried the music. People did not like it. I personally do kind of like it. All right, I'm going to turn the music off right now. I have found my video. While it uploads, let me play a quick ad for none other than Benzinga Pro.
Did you know nearly all stock price changes of 10% or more result from a single news headline? That's right. News headlines have a unique ability to drive stock prices up or down. These news catalysts create trading opportunities every day. All you need is a little help to reach out and take them. And if you're looking to grow your portfolio, it doesn't matter if your investment budget is small or big. An easy-to-read stream of news headlines will increase your opportunities to profit from price changes in the stock market, consolidate a knowledge-based investment strategy, and grow your portfolio. All you need is Benzinga Pro and its powerful news alerts, price tracking, and portfolio monitoring to make a positive change in your trading performance. We've already helped thousands of retail traders across the world, and they could not be happier. Increase your market knowledge, boost your exposure to big movers, and make informed trades before major price changes. The opportunities are all around you. Subscribe now, and we'll skyrocket your portfolio today.
Pro.benzinga.com, free 2-week trial for everyone. All right, I found my recording. Thankfully, it was in a different place where I left it. Now, I will play this conversation I had yesterday with Zhenyu and Craig Wilson from Elite Education Group, ticker EEIQ. Here we go. Joining me now from Elite Education Group International are Zhenyu, the CFO, and Craig Wilson, the chair of the audit committee. Both of you guys, welcome to All Access.
Thank you, Spencer. Hello, everyone. It's great to be here today.
All right, so let's start with this, Zhenyu. I'll just start with you. Tell us the story of the company. What does Elite Education actually do? What business are you in?
Well, it's great to start with talking about the story of the company all the time, right, Spencer? Thank you. Hello, everyone. And Elite Education Group International is a BVI company, and its main operating entities are all in the US and now have expanded to Canada. The company provides very comprehensive education solutions for both domestic and international students who are interested in university and college degree programs in the US, Canada, and the UK. Starting 2012, the wholly owned subsidiary Quest Holding International, located in Middletown, Ohio, has a recruiting relationship with the regional campuses of Miami University, where it maintains our company's residential facilities, a full-service cafeteria, recreational facilities, so on and so forth, and an office that provides study abroad and post-study services for our students. So over the past decade, we have established a great reputation about student services in these programs and built a very strong team in this line of business. Quest Holding International develops specific education goals and plans for each student who are enrolled in our program and provides a very safe and structured environment and support services so that students can focus most of their attention on academic studies. The mission of the company is really to provide our students with a reliable and comprehensive support system in order to fulfill their dreams of studying abroad. And it does strive to accomplish that by offering students and parents and their parents a one-stop destination for international study needs.
I want to bring up this chart that just kind of shows what your business, like the breakdown of your business. Can you break this down for us? You have new business here and you have traditional business. Break this down for us.
Yes, that's a great point to mention. Thank you, Spencer. So more recently, as you can see, the leadership team has developed the company's sustainable growth strategy in order to expand its business in the US and to Canada through acquiring colleges and operating and further developing their programs. As you can see on top of this graph here, we have become a major equity owner or convertible debt holder in 2 colleges, one in the US and one in Canada. Well, historically, we mainly acted as a recruiting agent, although we believe that our model at the regional campuses of Miami University of Ohio is very unique in that it's a one-stop solution, as what I mentioned, for students seeking study abroad experiences. So in this case, as you can see here, as a key part of the strategic growth plan of the company, we acquired a controlling stake in American Education Corporation in November 2021, which holds the convertible debt of Davis College, which is a 2-year career training college established in 1858 in Toledo, Ohio, and accredited by the Higher Learning Commission. It represents a key strategic growth initiative that expands our business model to be an operator of a college that provides career training programs as well as a transfer pathway to top universities for students who would like to pursue bachelor's degree in that sense. So we do believe that Davis College offers immediate synergies with our existing operations, as well as significant long-term growth opportunities in the US, and also a foundation of a global expansion strategy. And now let's take a look at EduGlobal here. On January the 15th of 2022, which was about 2 weeks ago, we acquired 80% of EduGlobal College through our wholly owned subsidiary in Canada, which is called Hirim Holding International Limited. In this case, we are taking the next step in our corporate growth by expanding our business model into the Canadian market, which is a key element in our strategic growth because it achieves the geographical diversification as an owner, as an operator following this acquisition in November last year with the holding company of Davis College.
Oh, I want to throw it to Greg for a second. Craig, can you outline? So what is the business model here is just straight, higher education, like for-profit colleges, correct? Is there anything different about it?
Thanks, Spencer. I'll talk briefly about our product line and our product really is higher education, and we offer higher education through 2 North American colleges that Zhenyu just mentioned. So we recently acquired controlling interest in Davis College in the US, EduGlobal College in Canada, and we also facilitate higher education for international students through prominent universities in the US and UK. So higher education for young people means an opportunity to build a future, achieve a good standard of living, having meaningful life experiences. And I'm passionate about higher education. I've devoted most of my life to it. Our particular niche is to provide students with academic programming for career training, English proficiency, as well as a gateway to college and university degrees. So the ownership of these two, the ownership stake that we have in these two colleges provides a tremendous opportunity for us to grow our student enrollment, to create value-added programs, and to make these colleges intellectually attractive and economically beneficial.
What type of programs are we talking about here?
Typical 2-year type diplomas, and allow an opportunity for students to take sort of the introductory courses of a 4-year degree at these campuses as well, and transfer those into other universities.
I'm curious what sort of macro headwinds and tailwinds that like you're facing right now. That could be for either of you.
Yeah. I guess obviously COVID has had a major impact on education, and particularly the higher education industry in general. A lot of classes have transitioned from in-person to online learning. Now we're in the process of transitioning back to in-person learning, but that obviously involves some significant safety concerns. I should state that not transitioning back also involves some issues, mental health concerns, for example, learning outcomes for students, and just missing out on the social activities and experiences that students get from an in-person experience. So obviously a balanced approach weighing these costs and benefits is necessary. I think in the long term, ultimately, we're going to end up with sort of a mixed hybrid component of offering both in-person and online delivery modes. And I think that will be true of most institutions.
Can you talk about that transition in the last couple of years and like how you pivoted to the remote and I guess ongoing hybrid model?
Sure. Well, the pivot to remote was very sudden. Certainly in Canada, we basically 1 week we were offering classes in person, and then just suddenly had to switch as the basically the entire economy was locked down. So the switch there was sudden. We had a couple of years to work and practice at it. So as practitioners in higher education, we became more proficient with using these online tools. So certainly that's why I think it's likely here to stay, at least in some part of how we offer things, now that we're comfortable and familiar with the tools necessary. But we've also noticed that the student learning outcomes, in not all cases, but in many cases, some students really need some of that in-person and hands-on treatment. So that's why I think we're going to end up with sort of a mixture.
So you saw like a noticeable change in student performance?
With my classes, I would say they were better able to manage it, but I know from my interactions with some of my colleagues, some of their students had some significant problems. Just having a hard time keeping up with things, motivating themselves. And I think part of that is some of the mental distress that sort of comes from that, and not being able to interact with friends and classmates as much as they otherwise could.
I should add that, Craig, you're also a finance professor, right?
Correct. I should have mentioned that first, because I'm a finance professor at the University of Saskatchewan.
So where, as far as like the growth of the business, assuming again that we are coming out of the pandemic, where is your growth coming from? Higher education in this country has a lot of challenges. It's prohibitively expensive for many people. So where is your growth coming from?
That's a great question, Spencer. From our understanding, there are two main areas from which the growth of the company will come from. So the first one, of course, is to further expand our traditional line of business with the regional campuses of Miami University. with the help of the recovery from the COVID-19 pandemic. That's exactly what Craig was talking about, and you were talking about in this case. The COVID-19 pandemic had resulted in very extensive travel restrictions, as well as a global economic downturn. And of course, it disrupted the normal operations of many businesses, including ours, and normal operations of the universities we work with. With universities returning to in-person classes and operations, in more recent days, more students who had been admitted to our program at the regional campuses of Miami University paid full tuition fees, even in such a challenging year of student recruitment. The strong results are also attributable to the ongoing effort to offer remote learning through online courses, as what Craig mentioned during the pandemic, as well as the further development of the foundational program that deepen the pool of applications. So under these circumstances, we do believe that our recruitment metrics are highly competitive with individual universities and other entities engaged in the space. However, there's another source of growth which is very promising, as discussed in a few minutes ago. That's from the new lines of business in US and Canada by being an operator of the colleges and developing the new programs in it. And you did ask questions about the new programs. We focus a lot on the business-related programs and management-related programs, as well as the English language programs and some science programs as well. To save time, I'm not going to talk about too many details of the programs, but would like to highlight that the company believes that this part of the growth is going to be very sustainable.
And then, what is your current admission rates, and how have those changed over the last couple of years?
On top of my head, I can talk about the numbers over the past couple of years. In 2020, of course, it's all of a sudden from January to March, the university operations have been disrupted, and we had the lockdown here in the US and Canada, and also, of course, it has affected the whole market. But in 2021, as what we mentioned before in one of our announcements publicly, it has been higher than last year, and we are very happy to see a lot more students coming back to the US, so that we can have the normal operations ongoing. Spencer,
in terms of the programs that you offer, you highlighted the business programs. I'm just curious, like, what are the most popular program? Is that it?
That is actually the most popular programs, of course, would be the preparation programs that are English language focused. And then after that, with Davis College, they are offering the business related and management related programs, as well as the medical assistance programs, as well as the design based programs as well. Those are all very popular.
Looking ahead here, guys, obviously you're coming off a couple M&A deals. Is there more appetite for M&A in the next year or two?
That's a good strategy, and that's how we are going to follow up with the growth strategy of the company to expand the new lines of business within the US and also to Canada, and we do plan to consider more.
How sustainable is this model? I don't necessarily want to get into like the numbers, or so deep into the weeds, but as far as like revenues and cash flows, how sustainable is this model right now?
I can take the first cut, and Craig, if you have more information, you can chip in. And we actually do believe that this new business model is sustainable, and that we are on the cutting edge of providing the best of both the traditional line and the new line of the businesses. What I mean by this is that we are enabling students to attain practical skills while at the same time we are enabling them to achieve the bachelor's degree in their academic plan. Certain things just do not go out of fashion, like the need of healthcare, and we view education as just like that. However, we plan to create programs that will meet the needs of the students for whatever economic climate they find themselves in. And so we think that our business model can be sustainable in the future. Correct. Anything to chip in?
Yeah, maybe I'll just talk a little bit about sort of the key problems that we're trying to solve and why I think it's going to be sustainable into the future. So one of the things that that the higher education industry in general faces is sort of an over demand and an undersupply. Essentially, there's a lot of potential students that get left behind with respect to either access to higher education or with respect to the quality of the educational institution that they can access. So our, in a nutshell, I guess, is we try to catch those students that get left behind or potential students and provide them the opportunities they need to get ahead. So as you mentioned, English proficiency for international students is certainly a key one. Practical education with great career options is another one. And one other example, I guess, of career options is in the computer industry as well. So that's probably another major element of growth that we're looking at. And the other thing I wanted to mention was that we offer a great opportunity and pathways for students to transition to other universities, to other well-known universities. So, helping students, and I know from my own experience with my own university, we look at providing credit for and providing access to students who come in with from a 2-year diploma, for example, and allow them to transfer a lot of their credit into our current program. And that allows them the opportunity to get a 4-year degree at another school. So it's kind of another route into well-known universities rather than starting from scratch.
Yeah, I know there's a huge market for overseas students who want to come to universities in the U.S. So, have you thought about like expanding the overseas operations to sort of foster that pipeline at all? That could be for
yeah, sure. Yeah, that's actually one of the biggest area we are going to focus on over the next couple of years. The company is intent upon capitalizing, as what I mentioned, the growth synergies as it diversifies by region, by academic disciplines, and also by operating models, as what we have been talking about. The company does believe that its unique positioning in the higher education field will enable it to achieve a so-called critical mass and further scale its operations to achieve the so-called sustained growth. And that's what the company will continue to pursue in terms of transformation opportunities in order to create value and a more balanced income stream to maximize shareholder returns. Spencer.
All right. I want to thank Zhenyu Wu, who is the CFO, and Craig Wilson, who is the chair of the audit committee at Elite Education Group. Guys, thank you both so much for coming on today.
Thank you, Spencer. Thank you, everyone.
Thank you, Spencer. It was great.
All right, let's before we bring on our next guest, everyone, let's just take a moment and let's just do some stretching. Let's just do some arm rolls. Do some. Let's get the energy going. Let's get the energy up. All right. It's Friday. We got some music in the background. Yes, I love it. All right, our next guest is here. He's lurking. We're gonna bring him on in a second. We're gonna get the energy up though. Let's see it in the chat. Let's see it in the chat. All right. Yes. Our last guest today, this one is live, I promise. We're going back to biotech. We're going back to pharmaceuticals. We're talking ADHD. a disease that many people are afflicted with, or in some way, shape, or form. I think we all probably know someone who has ADHD, and this company is working on solving for that and providing developing a drug that hopefully makes it more tolerable for people. We're going to bring on Schaffer right now. He's the co-founder and CEO of Cingulate. Ticker is CING. We got Shane. Here he is. Shane, what's up, man? How we doing?
Hey, Spencer. How you doing? Enjoy the music.
Thank you. We've taken the music down now because we've brought you on.
All right.
So, okay. So let's start with your background, Shane. You spent your entire 20-year career in pharmaceuticals, correct?
Yep, that's right. I'm a pharmacist by training, which pretty much would, at this point in my life, would just make me dangerous at a CVS or a Walgreens. But I've spent 20 plus years in the pharmaceutical industry. Had a great opportunity to work at, really the biggest companies in the world in our space. Pfizer, Novartis, and Sanofi, and just an awesome opportunity to learn, develop products and medications. And I'm a pharmacist by training, but really a business guy and entrepreneur for the most part.
So what happened in your life around 2012? Because that's January 2013 is when you founded this company, Singulate. So I whenever I talk to your founder, I always ask him that question. What happened in your life? Because to me, it seems you got to be a little crazy, right, to start a company. So what happened to you?
You definitely do. For me, it really came down to my relationships that I built over my career. And in all honesty, it was a July 4th barbecue. Myself and two of my other co-founders, two of the top preeminent key opinion leaders in ADHD, Dr. Matt Brahms, Dr. Raul Silva. We're over at Raul's house for a July 4th barbecue. And quite frankly, I had left Novartis by that time, was working at Sanofi. And we were actually just sitting around chatting and lamenting the fact that ADHD has been around for 75 plus years with different medications. And yet there still wasn't a single product available that really overcame the key unmet medical needs. And it may have been a good barbecue, might have been a good Coors Light, who knows? But I quite frankly just kind of had an epiphany and said, guys, we can solve this problem. We can go out and try to make lives better for patients, for the providers, and for payers. And that was really sort of the impetus and the spark that we had to go ahead and create Cingulate and build this company.
So, but why ADHD? I mean, as I said, we all know someone probably, or is that why?
Yeah. Actually, so at Novartis, I launched several products in the ADHD space. Okay. Dr. Brahms, Dr. Silva, they were obviously KOLs. They were guys that did our trials, but we became friends. And that friendship lasted, 12, 15 years prior to us starting Cingulate. So the conversation was around ADHD. That became the first focus for the company. And then serendipity kicked in as we built our platform and started realizing all the various other areas that we can go into down in the future.
Yeah. So let's talk about the pipeline. You got two candidates here, right?
Yeah, well, actually, there's three, and I do have to state, we have great attorneys here at Cingulate, but some of my statements obviously will be forward-looking, and our actual, results may be different than what I state here today. So always review the SEC filings, understand our risks, and most importantly, what our business strategy is. So what is our pipeline today? We use a very interesting proprietary drug delivery platform. It's called Precision Time Release. And where we are today is we have three assets in our pipeline. Our lead asset, which is where we're focusing 99% of our efforts this year on, is CTX-1301. That's a product with the generic for dexmethylphenidate, trade name Focalin. It's a product I launched and named back at Novartis a long time ago when I had more hair. This product leads our category right now. What we're doing is moving into phase 3 trials this year. We're really excited about getting that program in phase 3 underway. Our second asset is CTX-1302. In the ADHD space, physicians, they typically prefer stimulants at a 9 out of 10 rate. So stimulants are the gold standard in ADHD therapy. When you go a step further, they really split between basically what people think of as Ritalins and your Adderalls. What we've done is pick the two most clean, precise isomers of both Ritalin and the amphetamine side, and those are the two assets that we're independently developing to really overcome all the unmet needs in the ADHD space. Our third product is one in anxiety. We'll be starting a formulation trial for that this year. So Go ahead. Yeah, go ahead,
Yeah,
Spencer.
yeah. So how is this different than what's already out there exactly?
Yeah, what we really focused on and what we worked to build in this platform is really focusing on what are the unmet needs in ADHD. ADHD, again, it's been around for 75 years in terms of its identification and treatment. Right now, patients' number one complaint, physicians' biggest frustration, and payers' frustration with multiple medications is these medications do not last long enough. They work great, they're very safe and effective, but they have really short half-lives. So what that means is patients are forced to take multiple doses throughout the day. And today, what we have in our situation in the US is about 60% of patients are currently needing to use a booster dose every single day, either in the morning because the medication doesn't work fast enough, or in the mid-afternoon because that medication is really wearing off, the blood levels are starting to crash, you're getting some really unfortunate side effects, and most importantly, the medication isn't working anymore. What our product does and what we're focusing on is, number one, have the fastest onset of action within 30 minutes. Let's have that drug working effectively for children, adolescents, and adults with ADHD. Number two, let's cover that middle part of the day super effectively. Let's make sure we get that patient well controlled. And then the biggest difference that we have in our overall platform and our philosophy in treating ADHD is that built-in booster. We deliver a precise amount of medication in the right ratio right at hour 7. So right about 1 or 2 o'clock in the afternoon, if the patient took their medication before 8 o'clock, we deliver that third built-in booster. Not too much, not too little. We stop the crash, stop the rebound. We eliminate the need for a patient to pay for, a physician to prescribe, and a payer to reimburse for that second medication. And then we extend that efficacy with a term that we've coined entire active day efficacy. We want to give a patient that ability to get from home to homework, from breakfast to dinner, from revelry to taps. Let's cover their entire active day with one simple to use product.
Without getting too technical here, because you're talking to a layman, how exactly does this work?
Yeah, so up on the slides here, what you're seeing is product that I helped develop in Focalin XR at Novartis, and Vyvanse, Adderall XR, and Concerta. These products did a great job of doing, taking away that right before lunch dose. So typically, patients would be taking 2 or 3 medications every day. What we're developing is that next generation medicine. So we deliver 3 precisely timed doses of either dexmethylphenidate or dextroamphetamine, so 1301 versus 1302. And what that does is that gives that patient that ability to have that fast onset, entire active day duration, stop the booster, et cetera, et cetera. It's all in the delivery technology. It's all in that ability to give the patient one tablet and they're done for the day.
All right, let's talk timeline here. Where are we in that timeline?
So we've completed 3 clinical trials already with CTX 1301. That's our dexmethylphenidate product. We're moving into phase 3 trials right now. We're in study startup. We hope to be dosing our first patient in the April-May timeframe for our phase 3 trials. So we are laser focused on getting the phase 3 trials completed as soon as possible. This year could be as a stretch goal, if not early next year, and then getting that product submitted to the FDA for its new drug application in 2023, so next year.
So if we can fast forward a little bit here, is the idea that these drugs would basically just replace Ritalin and Adderall?
Yeah, so what's funny, Ritalin and Adderall have largely already been replaced. So right now,
really,
prior slide, what you're looking at now is a market where there's 2 amphetamines that dominate that side of the class. That's Vyvanse and Adderall XR. On the Ritalin side, you have Focalin XR and Concerta. We do believe, based upon our target product profiles and based upon patient feedback, physician feedback, and what payers are looking for, both of our products are really designed to be the dominant force in this marketplace because it provides patients, physicians, and payers exactly what they want and what they've been asking for the last 30 years. A single daily dose, better efficacy, better duration, faster onset, no more booster doses. Let's minimize the abuse and diversion of these short-acting boosters. We've really, in our minds, and what we hope to present to the FDA, is a product that overcomes all those unmet needs.
Is this a drug that could, I guess you would have to test for it, but it could be for anyone, right? It doesn't matter, adults, kids, teens?
Yeah, it's a great point. What's funny is people think of ADHD as a children's disorder, and there's a good reason for that. That's where it typically gets identified first. But ADHD spans a life cycle. So we'll be studying, and we already have, and we'll continue to study our product in children, adolescents, and adults. So we're looking, for 6 and older. And the adult market itself is twice the size of both children and adolescents combined. So there's over 17 million Americans alone that have ADHD, and we're definitely treating it. We're designing our products to treat the spectrum. We'll have 8 dosage strengths at launch. And again, I don't want to get too technical, but that is a really important aspect because those 8 dosage strengths allow physicians the ability to optimize their patients. You could take a really big guy that needs a low dose, or a young girl that may need a higher dose just based upon their neurochemistry. But it gives that physician the ability to maximize efficacy and minimize any tolerability issues.
So just to be clear, there's nothing else out there like this?
There's no product that is on the market today or in development that has the ability to do exactly what we're doing. Fastest onset, provide that entire active day coverage, create a great tolerable medication, eliminate the need for booster doses, and of course, reduce that abuse and diversion associated with those booster doses. We truly are that next generation pharmaceutical, the 3rd generation of stimulant treatments.
So Singulate as a company, this is your platform, and you're still getting this through the approval pipeline. So you haven't gotten anything through yet. But as we've talked about in your career, you've gotten drugs developed and through the pipeline. Can you just speak a little bit, even though the company hasn't, you've done it, right? And your team has done it. Talk to us about the how important experience is when it comes to just getting drugs through the FDA.
Yeah, it really is critical. And I've launched over 12 different products in the pharmaceutical space, from cardiovascular, the oncology, obviously ADHD and other therapeutic areas. So it's important to understand not only, number one, how to get the product approved, but also making sure that you're developing that product to meet the unmet needs in the marketplace. What is it that physicians, patients, and payers are really wanting? What are all the stakeholders asking for? So, I'm just one part of the team. I've been around for a long time, but we have great folks here. Lori Myers is a longtime chief operating officer in the pharmaceutical industry. We have a great executive team, great board of directors. Holly Mitzel's our regulatory and clinical lead. Nama Cordamanch, I'm going to get in trouble here if I don't mention all the names. But we have a group.
Don't be don't feel that way. Yeah. Don't feel that way. You can't mention everyone.
Right.
We'd be here all day.
We got a great team that has a lot of experience in developing drugs, getting them through the regulatory process. We work with fantastic partners in the industry, and that experience definitely does help quite a bit.
Who are those partners, and what's the go-to-market strategy here? Once you actually,
our priorities as a company is, number one, obviously, let's prepare and condition the market to understand better those unmet needs.
Sure.
And why our products are going to be really most effective to help patients out. We are looking at strategic partnerships. It's going to be a really critical element for us. There's really 2 field forces you need to properly commercialize in ADHD. Obviously, the pediatric and the family practice side, but of course, psychiatry and neurology as well. Those are really 2 totally separate field forces. So we're looking at strategic partnerships to either out-license the products completely or a co-promotion where we would handle one side of the aisle and they could handle the other. In addition to that, we're always looking at ways to make sure our medical information, our market access strategy, make sure that patients have affordable access to these medications. And that's just, it's the all-encompassing go-to-market strategy for our business.
And then I always ask, when I'm talking to any healthcare, pharmaceutical, biotech executives, is, trials are expensive. They require a lot of capital. Are you comfortable on that front, or is there going to be a need down the line?
There's always the opportunity to raise additional capital, no question about it.
Yeah.
Our development plan and strategy gives us a really good runway to get where we need to. Our focus is entirely in terms of the spend on CTX 1301. Does so much for us. It validates the platform, demonstrates the benefits of our product, and that'll give us that ability then to go out and do some follow-on types of offerings where we bring 1302 further along, 2103, and then the next products, which could be in areas like insomnia.
Well, I was gonna ask about that actually. Like what are the moving away from ADHD here? What are the other potential use cases for this type of technology?
It's funny when we were a smaller company on the private side, we did a lot of, private capital raise, and a lot of physicians that treated ADHD and other disorders would always say, hey, have you thought about this? Or have you thought about this? Because what our platform does, there's nothing like it in the world today in an oral tablet delivery system where you can precisely time when a drug is going to be delivered, in what ratio the drug will be delivered, and in what style it's delivered. By style, I mean, do you want to pulse it 3 times, or do you want to maybe pulse, have a sustained release 3 hours later, and then another pulse, which is what we do in ADHD. So eventually we'll have the ability to combine 2, 3, 4, up to 5 of the same or different medications in one very small tablet. The tablet's about the size of your pinky nail. It's a really unique compression technology. Maybe next time we sit down, we'll show you kind of how that technology works. But we really, the uses of this platform are endless. We're excited to explore those opportunities.
I mean, I don't want to volunteer myself, but I have some colleagues. I'm just gonna volunteer them without their knowledge. If you want to just test anything that's that's not approved yet, just let me know and I can connect you guys.
Pass them on to our chief medical officer. Absolutely,
right, exactly. I saw one of your slides in your investor deck that you are seeking the fast track designation for the FDA. Can you explain what that does?
Yeah, we've come along so far with 1301. We'll most likely won't be pursuing fast track for 1301, but for 1302, which is the amphetamine product, our regulatory team is assessing whether or not it's appropriate. We believe it will be. And that all comes back down to that abuse and diversion. It's a societal issue. 99% of the abuse and diversion of stimulants is not in your Vyvanse or your Adderall XR or some of the products that are extended release products. It's your short-acting stimulants. And most of that's like short-acting Adderall. So Adderall is the amphetamine side. We believe that by putting that booster dose, which now will no longer need to be prescribed, prior authed, paid for, or reimbursed, by putting it in the tablet, we have that ability to have a societal impact as well in reducing that abuse and diversion. So we'll talk to the FDA about that. They've been great to work with, and just make sure that it fits their perspective as well.
And so again, we're talking a once-a-day pill, right? That's what we're talking about.
True once-a-day pill. I launched a once daily 10 years ago. It was an improvement. It was that second generation of medicines. We're that next generation that is a true once daily. You can never take our product twice.
Shane Schaffer is the co-founder and the CEO of Singulate. Ticker is CING up on the screen, working on a couple candidates in the ADHD space. Shane, it has been a pleasure to chat with you today. Thank you so much for coming on All Access. Enjoy the rest of your Friday. Enjoy your weekend, and I look forward to following the progress of this company.
Same to you, Spencer. Nice meeting you. Take care.
All righty. All right, everyone. Here's the situation. We are at the end of our show. But I know there's always a but. Benzinga Live coming to you in about 25 minutes. I have been here with you for the last few hours, so I delegated to Aaron Bree. I said, Aaron, plan the show today. He's actually in a really good mood because he had some trades work out for him, although I'll let him talk about that. So that's what we're going to do on Benzinga Live. We got a lot of guests today. We got like 4 guests on the show. We're doing trivia. We did not do trivia yesterday. We ran out of time. We're doing trivia today on Benzinga Live. Going to give away some free swag. We're also going to do a Guess That Chart segment, give away some more free swag. So stay tuned for all the free swag on Benzinga Live here. Oh, you know what I was asked to do today and I forgot? Sorry, Enver. I was specifically asked if I could plug Benzinga's social channels. So if you are on Twitter, you need to follow Benzinga at Benzinga. If you're on Facebook, follow Benzinga on Facebook. If you're on LinkedIn, we're on TikTok, we're on Instagram, we're on Vine. We're even on Vine. No, we're not on Vine. No one's on Vine. But seriously, follow us in the social media metaverse. We're on MySpace. Actually, I don't know. We might be on MySpace. Maybe we're not on MySpace, but should we get on MySpace? One in the chat if we should get on MySpace right now, or GeoCities. I can arrange that. But seriously, Facebook, Twitter, Insta, TikTok. Hit us up. Tweet at us. DM us. Do all the social media things. Hey, sometimes you may even see me on there. All right. this is going to be a wrap for All Access today. We'll be back with more of these one-on-one conversations next week. As a reminder, I said it at the top, I'll say it again. This show is sponsored. The companies that appeared on today's show did pay Benzinga to be here, but none of them knew what I was going to ask them, and they really didn't know what you were going to ask. That would have been creepy if they knew what you were going to ask them. That would have been like some Matrix level stuff. But so we keep the conversation informal and casual and spontaneous for that reason. And we disclose the fact up front that this show is sponsored. It's also sponsored by Ticker. It's TIICKER/Benzinga. What's that? You missed the explanation of what Ticker does at the top of the show? Don't worry about it. I got you. Where's that video?
What is Ticker? That's right, Ticker with 2 I's, just like you. Because it's for you, for investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering.
Ticker.com/Benzinga, TIICKER/Benzinga. Open an account, connect your brokerage to it. Confirm your email. When you confirm your email, there is a box. The box says, hey, did you hear about us from Benzinga? You say, yeah, I heard about you from Benzinga. That's why I'm here. You check the box. That box means they will send you a $20 Amazon gift card. Do it. Ticker.com/Benzinga. Get rewards for owning stocks in your favorite companies. All right. Thank you to our guests today. Thanks to Evan Sohn from Recruiter.com. Thanks to Gareth Sheridan from Nutriband. Thanks to Zhenyu and Craig Wilson from Elite Education Group. And thanks to Shane Schaffer from Cingulate. More importantly, thank you for hanging out with me. I did promise I would do a crypto update. Let's do a crypto update real fast. All right, I'm pulling up my heat map. I don't have it up right now. Give me 1 second. I'm going to benzinga.com/markets/cryptocurrency. Going to share my screen. Let's see what the heat map says for the day. Oh, look at that. You like to see it. All right, we got green. A lot of green. Bitcoin, wait a minute. Someone said it was above 40. Someone lied. Bitcoin 39.7, ETH 28.8. Everything is green on the screen. It's a risk-on day. Get your buying shoes on. We're going to the store. We're going to buy some Bitcoins. Anyway, that's nice to see. It's been a while. How long has it been, everyone, since the heat map was straight green? It's been like at least a couple weeks, I feel like. I don't know. All right. You want some free Bitcoin? It's very easy to get. Go to the Voyager app, download it, open an account, and use the offer code ZING, ZING. And when you do that, you got to also fund your account with $100 and make a trade. Then Voyager will send you $50 in Bitcoin for free. Check it out. All right, I'm going to hop. We got 20 minutes until Benzinga Live. So everyone go for a quick run or take a break or whatever. But I'll see you guys back on stream here at 11:30 a.m. Eastern time. Can we get to 200 likes? Let's get to 200 likes. We can do it. Oh, thanks, Jim. I didn't even Jim, I didn't even know that. All right. Cool. Yeah, log into Facebook just to like Benzinga and then log out of Facebook. Big brain time. Okay. That's a wrap. I'm being told to stop talking right now, so I'm going to go do that. People are sending me messages. I don't know what they're saying. I just saw the screenshot of the heat map. It was all green. So the green screen screwed it up. Oh, man. Virtual green screens are fun. All right, I'm done. Benzinga Live, 11:30 a.m. Eastern time. catch you guys over there. This has been All Access. Thank you for watching. Producer, roll that video one more time for us. The All Access.